Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra. Hi, Sonal.
Hey, Reema. Good afternoon. Well, good going for the markets today. So we have a lot to track. So we'll start the show with the top headlines and discuss all the individual stories. Midcaps rally in line with large peers as stocks continue their winning streak. Nifty trades firm, top 17,700. All sectors except realty flash green.
MGL buys Unison in Vero to enter new city gas areas and gets a thumbs up from analysts. Citi hailed MGL's inorganic foray as strategically positive and growth accretive. The stock hits a fresh 52-week high.
Alembic Pharma gains on the US FDA's approval for its breast cancer injection Fluoropasil.
Strong demand outlook gives Lemon Tree Hotels a boost. The management tells CNBC-TV18 the hotel industry is outpacing supply and they expect to clock double-digit growth in the coming year.
Angel One continues to gain on a strong business update and bullish commentary. Management tells CNBC-TV18 orders of 41 to 42 lakh rupees a day appear sustainable given market trends. The broking firm expects to maintain margin at about 50%. Okay, those are the top headlines that we are tracking. As far as the markets are concerned, a good day for the bulls yet again after that rally that we saw in Friday's trading session. And it is supported by the global cues that we saw as well. Has been steady for the Nifty, up 150 points. A slight dip from the highs, but it's nothing that is worrying for now at least. The mid-cap index in line with the benchmarks, up around 0.8%. Banking names, though, are underperforming the benchmark. So that index is up around 0.2%. We have advance decline ratio in favor of the advances. And while we did see a rally in Adani Group stocks, they've come off from the highs. So Adani Enterprises, as we speak, is 8% from the highs of the day, and Adani Ports too is lower from the highs at least, still higher by around 0.6%. Reema.
Yes, and you spoke about banks in that the PSU banking index, the Nifty PSU banking index is currently in the red. So from the day's high, the Nifty PSU banking index has lost 1.9%, and names like UCO Bank, that's down 2.7%, IOB down 1%, Central Bank down 1%. So the PSU banking index and the individual constituents have seen a lot of profit taking. But let's invite the first corporate on our show now, Cigniti Technologies. The stock is up 52% in the last 1 year. It's also hit a fresh 52-week high with the up move that we're seeing. Came out with numbers a couple of weeks back and it's been a strong Q3 performance. And the management has said that we're confident about maintaining our targets for FY23. Krishnan Venkatachari, the CFO at Cigniti Technologies, is with us on the show now. Afternoon, and thanks so much for joining in. Could you give us an indication of how Q4 has panned out? Because in Q3 and in the conference call which took place, you did indicate that you won some logos in Q3, which will start contributing to growth in the current quarter. So how has Q4 shaped up in terms of demand, in terms of revenue numbers, and what can you end the year with?
Good afternoon, and thanks for the opportunity. And yeah, Q4, as of now, we are cautiously optimistic, and definitely the business is looking good. I think going by the run rate, though we are not in the process of giving any guidance, but I think going by the run rate as to what you could see over the last 3 quarters, I think we are confident of repeating the performance for the quarter ahead. And the year ahead for the next year also looks very good based on the order book position and the kind of renewals which has taken place over the period. So we are confident to repeat the performance to a reasonable level. Absolutely.
Okay, what do you mean by reasonable level? Because 9-month revenues is $154 million, FY22 at $168 million, which, if going by the quarterly run rate, you would be doing a 25% growth this year itself. Can you tell us how much of it will be led by price increases? Because some of your clients have agreed to price hikes. Will you be able to take any more? Are there any negotiations ongoing right now?
Yeah, out of the 32 clients, out of the top 60 clients have given a price increase, and out of the range of price increase has moved from 7 to 10%. And this increase, which has been accounted for probably from 12 clients effective January, and the rest of the clients are getting affected from 1st of April. So that is to give the statistics, because based on the renewal timing and periodicity at which the negotiations have taken place. And going further in terms of the price increase for the existing clients, I think the existing set of clients probably in terms of the price increase, I would say that the scope or the headroom in terms of the revision on the price increase is very limited. But I think it's more to do with respect to the selling, because as a combination, just wanted to step back and give a breakup in terms of the digital engineering foray, which we have done very clearly. While the digital engineering per se in the segment in the last financial year was at about close to 6-7 million, I think this year it is contributing about 18%, 9%, which is at roughly about 18 million on the estimated number of 200 million plus. So we are giving a big push for the digital engineering, and we have estimated that we should be doing close to about 24% or so in the next year in terms of the total revenue, which could also be in the high teen growth, which we are confident of doing a high teen growth in the next year.
Could you repeat how much will digital engineering contribute to revenues in FY23? Next year, it will be 24%.
Next year, 24%. This year, we'll be closing with about 9% on the digital engineering side of the total, which yields me slightly. So I have now taken I've put in all my efforts in terms of trying to get through a better realization and better utilization on the digital engineering foray, which should tilt the margins in our favor.
Okay, what does that mean exactly? I was going to ask you about margins itself. Margins in your favor, you're looking at higher utilization, price hikes as well. Your margins have increased from 9.2% in Q1 of FY22 to levels of 15% in Q3 FY23. Is there more scope for improvement here? And if yes, by how much?
Absolutely. I think we are targeting north of 16% plus in the next year, based on the current estimates what we have. While the year probably could land up on an average, including all the quarters put together, could be at about 14.3%. But I think we will move up the north of 16% in a good way, basically, based on this digital engineering foray with the price increase coming for the full year coming in, and then few composition mix in terms of offshore to on-site as we see more traction for offshore, which can yield us on the margin front. So these are the, and plus a pyramid mix, which is a continuing factor, and with the stable labor coming through over there, I think we are confident that we should be able to increase by a couple of basis points. Yeah.
So just to revise the numbers, 14.3% EBITDA margins for FY23 and FY24 will be 16%, correct?
Absolutely. The 14.3% is as it stands when you see the 3 quarters numbers and repeating the performance, the math works out. Yeah.
Okay. You know, I remember when we spoken to the company about a year and a half, 2 years back, you all had spoken about an ambitious target of $500 million in terms of a top line. Well, now at the current run rate, you're already above $200 million. When do you think you will be able to achieve this $500 million milestone?
We have kept ourselves, in the last year, we did a rejig on our strategy very clearly, is that organically, we have kept a target by 2028, we should be getting to about 650 million. While inorganic is a pursuit, which is considers several factors. But I think ambitiously, the company with both put together organic and inorganic, we would like to see us at a $1 billion deal, $1 billion size, basically. But organically, I would put it very clearly that we are ambitious and we are having a plan till 2028 to be there at about 650 million.
By 2028?
Absolutely. Okay.
All right. So, considering whatever we've been seeing globally, I wanted your take on the retail segment that contributes around 16%. Is the cautiousness continuing here? What is the outlook going forward? And will this continue to remain that 16 to 17% mark?
We have estimated on a cautious basis 16-17%. But if you look at on the retail as a segment, basically, while the enhancements have not happened, basically, but we have not seen a pushback in terms of reduction in terms of the budget for the retail as a segment where we are operating with the customers. So we are, however, we have remained cautious for at least for the next 2 quarters. We remain cautious in terms of the retail segment.
Cautious, but what is exactly that you are seeing in the retail segment? Have deals been paused? Is the ramp up not taking place? Further spends being curtailed?
Yeah, the further spends are not being happening, and the ramp up in terms of anticipation is not happening, and has been deferred by about a couple of quarters.
Okay. All right. So then can you tell us what is the plan? Like, do you have any inorganic plans going forward in FY24? That is, because we are already towards the end of FY23. Something in the pipeline. What is the deal pipeline looking like?
there is a separate team which is reviewing that, and we are on an everyday basis. We are reviewing, and we are very serious on the inorganic side to acquire predominantly more in terms of capability on the digital engineering side for that. And we are evaluating proposals, but I think it's more fair basically that there is a fair amount of pipeline available today, and we will definitely come back shortly on that uniformly across as the board decides, and then when we conclude. But then to answer in one line is that we are serious, we are on the job, and the pipeline is very good.
Thank you very much, Mr. Venkatachari, for joining us and laying out the shape of the demand for you. Get into a break. On the other side, we'll talk more about individual stocks. Stay tuned.
Welcome back. Well, there is some sell-off from the top. So Nifty is up around 144 points, up 0.8%. So yes, there's some selling that's taking place, and Bank Nifty is the one which is causing that. So that index is up around 0.15% right now. Whether that will continue or not, let's get a technical check on the markets. Mitesh Thakkar of Earning Waves is joining us now. Mitesh, good afternoon. Thank you so much for joining us. Well, this little bit of pressure that we are seeing from the top, this sell-off that has come just a few minutes back, is that an indication of some more selling, or do you think index will be at these current levels?
Yeah. So my understanding is that 17,750, 800 was a zone where some profit booking was expected. We actually highlighted that zone in the morning because there was a gap. When we were declining on the day of 22nd of Feb. We had gap down, and this gap was from the low on 21st was 17,800, and the high the next day was 17,772. So there's a gap over here. There's also a retracement zone, and there's some moving averages around the 17,820 mark. So this entire 50-60 point band is filled with multiple supply points. Given the fact that we have had a rally on Friday and we have had a good rally today afternoon as well, I think some profit booking was expected. We have done that. But I think eventually maybe 2-3 days of consolidation might take place. But I think eventually there's a good chance that now we are looking at getting past this zone. And once that happens, then 18,000, 18,150 area could be targeted.
You said how much lower do we go? 17,800 was resistance. We've started trending down. Where do you think we will reverse before we head back up to 18,000?
See, my understanding is that, the first target once we start getting past 17,820 should be 17,970 to about 18,000 and then 18,150 on the upside. So the overall setup is positive, but I think after 2 days of rally, we might actually see about two days of consolidation as well. And that could take some time. And I think, in that, use intraday dips to buy into the markets. Even on the stock side, I think, wait for that dip to happen and then create long position. And unless until we break 17,600, I think I'll maintain a very positive view on the index.
Okay. All right. Mitesh, thank you so much for joining us and taking us through those technical picks and technical outlook on the index as well. But let's move on and talk about our segment, Mid-Cap Movers. We have Vivek with us, as always, to take us through the mid-caps that are moving around in trade. Vivek.
Well, good afternoon. It's a session where, again, you're actually seeing quite a bit of outperformance as far as the broader end of the markets are concerned, especially the small cap names continue their rally from recent lows. Our first stock on our list is Kiri Industries. Now, this particular stock, after the favorable court verdict, has moved up almost 30% in the last 3 to 4 trading sessions. The other stock that's doing very well today is Aptus Value Housing. In line with the theme where we are actually seeing power utility stocks outperform, JSW Energy today up almost 10% on good volumes as well. And Veranda Learning Solutions too up today, up almost 8% in the session. Some of the stocks that are moving higher on very strong volumes are some names from the chemical as well as the fertilizer pack. India Glycols today, after a while, has moved up almost 16%. Mangalore Chem and Fert, after a very long stretch of underperformance today, up almost 14%. Ingersoll Rand up on very strong volumes today, as well as Sunflag Iron and Steel up in the session on very good volumes. On the other hand, some of the stocks that are seeing a bit of profit booking, Macrotech, after the 3 to 4 days of outperformance that the stocks are today, down almost 3%. Indigo Paints continues its down move. Dreamfolks as well as Data Patterns today seeing quite a bit of profit booking on strong volumes.
Welcome back. Let's get to our mid-cap spotlight segment. Sonal, you're looking at Neogen Chemicals?
Yes, they've made an interesting but small acquisition this time. So 25 crore is the acquisition size. They have entered into a definitive agreement to acquire 100% stake in Bulai Chemicals India Private Limited. Now, what does the company do? It owns the technology to manufacture N-butyl lithium and other organolithium products. Now, lithium is something which is used in a number of sectors, mostly in the batteries that we use for our electrical components, and also for some of the complex manufacturing into pharmaceutical and agrochemicals as well. These are the products which this particular company has the technology for. So it is, as I said, used in manufacturing of several complex pharmaceuticals and agrochemical intermediates, and Neogen Chemicals tends to benefit from that because it is in manufacturing of bromine, lithium-based specialty chemicals, which are again used in agrochemicals and specialty chemicals and pharmaceuticals as well. Now this helps them gain the technology to produce these kind of products. Now remember, they did say that in Q3 margins were impacted because of volatility that they saw in lithium raw materials, and company was unable to pass it on to the customers, and that's why margins suffered a decline on a YOY basis. However, they expected demand for lithium-based chemicals to be strong in Q4. So lithium pricing really impacted how their margins moved, and that is something that impacted their margins. But with this technology, maybe one, they will be able to produce these chemicals in-house, and that is something which will help them in terms of margins and backward integration as well. And that's why the stock is up around 6% in trade today, Rima.
Okay, let's talk about another one, Ashoka Buildcon. It's up 2.5%. Vivek, can you tell us a little bit more? We know that the company that MGL bought, it was from Ashoka Buildcon. So how does it change the dynamics for this company?
Well, absolutely right. So, it's a subsidiary of Ashoka Buildcon that, MGL has purchased this particular stake from. So, two important news developments have come in as far as Ashoka Buildcon is concerned. Number one, the company has actually received a notification of award from South Bihar Discom. What the company has to do is it has to build the Discom infrastructure. The contract value for that particular order is a little over 260 crore. Now, coming to the part where the company has sold the entire stake in its subsidiary to Mahanagar Gas Limited. A little bit about the company itself. Univision Enviro Private Limited is a subsidiary company, 100% subsidiary of Ashoka Buildcon. It's actually part of a JV where Ashoka Buildcon has 51% stake, and the remaining 49% stake is held by the Morgan Stanley India Infrastructure Fund. And Ashoka Buildcon has managed to make a 4x return from the 140 crore that the initial fund had actually put in. So 531 crore is the kind of return that they've got on the back of this particular stake sale.
Okay, all right, Vivek, thank you so much. So the Ashoka Buildcon stock is up 2.5%. With that, we'll take your leave on this show with the news that markets have come off a little bit more from the highs of the day. And as we wrap on the show, we leave you with some market opinion from Rahul Chadha of Mirae Asset Global Investments. Stay tuned, Inside Out, when we return.
Expecting some interest rates cuts from Fed towards the end of the year. I think that's got a pushback with this sticky lingering inflation in the US, and that would be kind of a headwinds for markets globally. Dollar may continue to be a bit strong. In India also we are seeing signs of slowdown, but look, any medium-term investors should take this opportunity of this time correction, prime correction, to add to equities exposure. So from a medium-term perspective, this is good time to buy the names we like. Near-term is going to be choppy. Ability to or liquidity to add for next 6-9 months, or at least that kind of an attitude that it doesn't matter that these names may go down in 6 months, but eventually over 12-18 months they'll do well.